Hello, everybody. My name is Drew Dosick, and welcome to Trading the Close. Today, folks, we saw a market that was rejoicing, was pushing higher for most of the stocks, particularly Intel, MongoDB. We're going to get into those stocks here in a little bit. Keep in mind, too, tomorrow we've got some data being released. I mentioned this yesterday. We've got the ISM services, PMI, being released at 10 o'clock. That should be a gauge that the Fed digest for potential rate cut next week. So be watching out for those results. Till then, let's just jump into the market summary board and see where the market ended up today. We've got the Dow Jones up 0.37%, Nasdaq up 0.59%, S&P 500 up slightly, up 0.19%. U.S. oil is down 1.5%. Gold down 0.55%. Bitcoin really caught some traction, folks. Now pushing back above $90,000. We're going to look at that chart and see where price stopped and at least struggled intraday today. Very curious stuff, especially because we love going through technical analysis on charts. All right, next up, the S&P 500 heat map. We can see here we've got some green and red on the board. That's what you would expect with a minor update. Mainly the green is composed and contained in the tech sector, right? We've got NVIDIA, Apple, both up on the day near 1%. Microsoft up 0.67%. Meta up 1%, Palantir up 1.91%, APP, nice pop on APP, up 4.72%. As I said, Intel really pushing hard today, up 8.65%. We're going to look at that stock. We're going to look at Symbotic, which got slammed today, and we're going to look at Boeing as well as MongoDB here in just a little bit. First off, we've got the S&P 500, and look at what we have here, folks. Another test on the top end of this parallel channel. And if you look down here on the 10-minute chart, look at this price action today. It was really all over the place. We were moving up, tested the top end of the parallel, got rejected, bounced right back up, got rejected again. Look at these sharp red 10-minute candles selling throughout the course of the day. One interesting thing to see, though, was that we did have a breakout through the middle of the day. You see on the 10-minute chart with this declining trend line, we had price push up higher, looking like we were going to go and test that parallel top again, but then sold off towards the end of the day in the last 10-minute candle. Very interesting stuff that has happened there on the spiders on the S&P 500. All right, next up, we've got the Qs. And the Qs, folks, as you see here on the daily time frame, I've zoomed out, all right? And I've zoomed out for a reason. I've got another parallel where I see a lot of the intraday price action is going. This is really interesting stuff. So if we go here, create another parallel, we can see here, and all I do, and this is one of the best parts about technical analysis, it's fine tuning, trying to get the right levels that work on charts, especially these charts are fluid. They're going to move, much like my current trading view is doing right now. So we see here when I draw this parallel and I connect it up, all right, let's get that out of there. All right. There. All right. So we've got this parallel, pardon the interruption there. We've got this parallel that I've drawn connected over from the April low to the most recent pivot that occurred in November. Look what happens when I drag this out and I pull it over to where price action touches the top end of this parallel channel. Notice I'll zoom in a little bit more and you can see what's going on here. We had price come down, tag that 50% area, get you bounce. This is a great near-term parallel, much tighter than the larger one that we were looking at and analyzing. Notice I've got resistance here at $624.97. That still will be resistance, but it's backed up by another level of resistance at the 50% area of this parallel, which in essence is gap fill from this previous high right near the collection of consolidation when we did make all brand new all-time highs. So we've got some serious resistance pushing up. Plus, we've got a time count developing on the charts, pushing up nearly vertically on the charts. That all implies once we hit resistance, guys, have some caution there, because a sharp move up is usually met with a sharp move down. Now, I know we've already had a sharp move down, met with the sharp move up, but we can still continue to chop like this, all while being in this parallel. So be mindful of what's ahead, and we do have some stiff resistance in that area. But one thing that's given me insight that could lead to potential more upside is right here on the SMH. The SMH, as you see here, guys, continues to push up. Not only did we confirm in the top 50% of this parallel just the other day, we continue to accelerate up, which then means the top of the parallel is the next resistance. Now, yes, we will have a gap fill to fight through. right here around $366. But then we also have the top end of this parallel, which could be flirting again with new all-time highs on the SMH. The return to the tech play at least is visible right here on this screen. You see the volume too, very light, folks. Very, very light. So this is all suspect to me. This could be just a little float up before a nice smack right down on the charts. Support, though, will be at 347 and 38 cents. So be watching this 50% area should we have any selling pressure, because usually a good bull move, you want to see some volume behind it. You want to see some conviction. And this is just some really light volume price action that we're seeing, pushing the price up on the charts. Next up, we've got the IWM. Now, the IWM today, as you see here, is having a down day, but really kind of contained all within yesterday's candle. A little bit of a close underneath, but mainly notice this trend line I drew yesterday that was saying that as long as price stays up here, man, this is extremely bullish consolidation. Now, bullish consolidation can still come at a trajectory just a little bit lower and still maintain that, but this would be the most ideal bullish setup. See price maintain above these pivots. We'll see where price action takes us tomorrow, but all the while, IWM is still saved on that chart. All right, next up, Bitcoin, guys. Check this out. Let me reveal it. Boom. All right, where did price stop? Didn't take a rocket scientist to figure this out today. And then even let's zoom in on the 10-minute chart just to show you the validity of these parallel channels. These parallel channels, as I've said, guys, they give us so much information. Not only are they showing where price could eventually go, they give us three trend lines: the top, the 50% area, and the bottom, all of which price should react to when it gets into it, like it did here with Bitcoin. As you see here, price moved up, kissed this area, then put in a bull flag, and then continued pushing up more, consolidating right here underneath the 50% area of this parallel channel, implying that we were about to go higher, but it said, nope, not so fast, not today at least. Getting rejected, pulling back down. Now it looks like Bitcoin's making another run to go up. Now they close at 7 o'clock tonight, so be watching where price does close. If we zoom back out to the daily time frame, you can see here that we do have a nice move up, almost negating entirely yesterday's candle. We didn't, it wasn't an engulfing candle. Really hard to get those on Bitcoin or any cryptocurrencies since they do trade 24/7. All right, guys, next up, we've got the gold chart. Now, gold had a peculiar day. Yes, we closed in the top 50% of this parallel, which is in the near term is very bullish. It's a good close for gold. But you look at this 10-minute chart, gold was really all over the place, folks. You can see this starting back here early in the AM. We tested the top end of the parallel, or the 50% area of this parallel, for bouncing and then getting underneath, fought to get back above, then collapsed underneath, all the while finishing the end of the day just barely back in the top 50% of this parallel channel. So gold is safe for now, but that was showing that there's still a lot of investors that are happy to cash out with gold returning back up here to these previous pivots. We'll see if gold remains in the top area of this channel in the coming days, as that will then imply we're going to continue up and test those previous all-time highs. Next up, silver. Oh man, forget about all-time highs with silver, at least for today, because we're trading within yesterday's candle. But man, this is a strong move on silver. Profit taking was happening earlier in the day, but as you see here towards the end of the day, investors piling right back in, pushing price up right near yesterday's highs. So be watching price potentially tomorrow. Now, we're overbought in the near term on silver. We likely should consolidate or even pull back, potentially tag this trend line again before going back up. But if we have momentum continue pushing us up, next resistance right here on this trend line at basically at $62. That's an inclining trend line. I can show you where that comes from. It comes all the way back out here. This is a longer term trend line on the monthly time frame, coming back from a pivot on October 1st in 1980, folks. 1980 connected to the pivot high that occurred here in 2011. And then that's the area, the line in the sand that likely will provide a lot of resistance, especially if silver continues marching up with this trajectory right into that trend line. Should see some profit taking and a nice pullback down on silver. Next up, U.S. oil. Now, guys, with U.S. oil, yes, we've moved up here and then really been chopping sideways. I've been analyzing the day-to-day candles, but really, if you step back, this is more bullish consolidation. This is a little odd. Iran is at record levels of oil production. OPEC is not slowing any of their oil production. there's just oil being produced all over the world without any really cessation. So we definitely can be going lower on the charts. Mainly, I'm watching this red candle. I've talked about this before, but when you get a big red candle in the charts, you got to pay attention to that, as that likely will dictate price. And you say, well, Drew, that's baloney. Okay, well then go back here. Look at this red candle. And notice that price really hasn't confirmed above this red candle. We're talking about October 10th now. And this red candle implied price was going to at least stay at the highs or go lower. And that's what's happened now for almost 2 months. So whenever you see these big red or big green candles, raise a flag up, take a note, jot it down on your chart, because it could and will control price action for the near term. So with all that being said, still same thing. Resistance up here, 61.06. Support near term down here at 57.11. If we start selling off more with more production in oil, more supply, less demand, we're going to be looking at $54.47. Next up, Nat Gas. Now, Nat Gas, we've really been knocking this out of the park, folks, playing pinball amongst the support and resistance areas. The previous resistance level, right around $4.70, taken off yesterday because price action has simply pierced through it and actually closed above and stayed above for several days. Next resistance to the upside, $4.92. But the longer we chop sideways, the more momentum we can build for a bigger move. So we'll be analyzing this on a day-to-day basis to give you insight as to the direction of that potential move. Next up, we've got Symbotic. Guys, Symbotic got slammed today. We had a Goldman Sachs announcement came out lowering the price target down to $47. And as soon as this stock opened throughout the day, you could see it's paused here for basically 30-40 minutes, and then the selling persisted, and it was nasty, folks, not really giving much of a bounce at all. It caught me off guard in a day trade, and man, this quarter's been tough, but we've got some awesome traders all pulling the weight and keeping us profitable for this quarter, doing a fantastic job. Now, where is Symbotic going to go? Let me just illustrate too how big of a sell this was intraday. Remember what I've talked about last chart, or 2 charts ago, about big red candles? Look at this big red candle. This is nasty. Now, also, technically speaking, look at how many levels it broke through. And for those folks that don't know how to draw Fibonacci retrace sequences, this is a great quick tutorial for you. So all I'm doing is coming down to the pivot low prior to the earnings report most recently. Draw my first pivot. And then I go up to the most recent pivot high. And then now I can see clearly what's happened with this move. Now, notice today we opened the day up above the 236 fib retrace. Then we plunged through the 382, closed beneath the 50% retrace. We smacked down 3 different Fibonacci retrace levels in one day. Guys, now we could get a bounce. We're right here at the 50% area of this parallel. So we could get a small near-term bounce right here, but this selling pressure likely will lead to more selling pressure in the near to mid-term. Just as I've stated with these big red candles, got to pay attention to them, but it did close today just above the support of the 50% area of the parallel. I can see how we could get a bounce up at least to the $69, potentially $70 range. But then watch out, we could be headed down lower. And as you see here, are all great levels to pay attention to. Right here, 63.59 could provide the support to retest the 50% area of the parallel. But then if this breaks, we're likely coming down here to the bottom end of this parallel channel, getting much closer to that target that Goldman Sachs just released today. Next up, we've got Boeing. Boeing, as you see here, beautiful push up today, up 10%. Very nice move on Boeing, but notice I've got a longer term inclining parallel channel. Now, in the most immediate near term, what Boeing needs to do, obviously, get back to this 50% area of the parallel. However, if you notice, I've got a trend line that I'll draw right here once I get my mouse over the pivot high. There we go. Connect these most recent pivots. And you can see here that Boeing's actually going to have a pretty decent test to get up to that 50% area of the parallel. Now, Boeing did announce they do have an increased demand and rollout of jets coming in 2026. Investors rejoiced as the cash and margin question for Boeing is slowly being put behind them. So investors piled back in. Next resistance will be right up here underneath all this chop, right around $215. Followed by this declining trend line at $232.59. Be watching those levels, especially if we move rapidly up there. We could see consolidation before we break out further on the charts of Boeing. Next up, MongoDB, guys. MongoDB Beautiful earnings beat. Check this out, guys. Up 63.88% on earnings per share. Revenue up almost 6% at 5.79%. Investors rejoice, catapulting the stock up over 20% on the day. As you notice, though, we did reach a new high here in near-term high in 2025 before price did retreat back down on the day, closing the day here at $401.99. So where does this take MongoDB from here? Well, if you scroll back out on this chart, and you can see we've got a declining trend line. That's the most significant level of resistance for the near-term future, which is going to be at $443. Now, if we have continued profit taking, be watching $353.72. This area still would provide support capable of providing a retest bounce up here to the declining trend line on the screen. Now, if this level breaks, a lot of this bullish positive momentum near term will also falter. Be watching the next level of support at $313.03. But still, a great day for MongoDB, pushing up over 20%. Next up, and lastly, we've got Intel, folks. You see Intel pushing up today 8.65%. Now, this is on the back of a potential deal with Apple supplying some lower level Model M chips for in 2027. Now, they have to design a kit that gets presented and passed by Apple. That should happen in 2026. So we still have time yet for this deal to materialize. Yet the investors jumped right in, pushed price up, tagging this resistance level at $43.78. Now scroll back out on the chart. You can see this is a beautiful inclining trend line connecting these pivots all the way up to the current price, which is another resistance level. All the while, notice this divergence on the RSI. We had a higher RSI here when price made its pivot back in September. Then we had a lower RSI when price was higher in October. Now we have a lower RSI when price again is higher in December, all implying that some of this momentum will start faltering, and we need some consolidation or a pullback to continue moving up on the charts in a healthy manner with Intel. Maybe near-term overcooked, so be watching if you're a bull on Intel for consolidation pullbacks. Support level here at 38.16. That would not damage the chart and would actually provide a great level for it to consolidate, potentially get support and bounce up off of, to then potentially attack this inclining trend line once again. All right, folks, that wraps up Trading the Close. Can't thank you enough for watching and tuning in with us. Don't forget to like and subscribe. Also, send this out to your friends and family so they too can learn technical analysis and make money, all while sitting in the comfort of their own home. All right, folks, we'll see you again tomorrow on Trading the Close. Until then, have a fantastic day, and I'll see you on the charts. Take care.